OK, well, to talk in depth about this hostile takeover, I'm now joined on the line by Gavin Wendt from MineLife Resources. Thank you very much for joining us today, from Sydney, I believe. How do you think this hostile bid is going to be received by investors?
Well, not too favourably, and I think the reaction of the market tells the story. I mean, what we generally tend to see in these takeover situations is that the bidding company drops in value and the target company increases in value, and that's exactly what we've seen. I think, though, that in this particular instance, the fertilizer business, particularly potash, is certainly a hot property at the present time, and there are relatively few large players. It's the sort of business that BHP is used to doing business in. So, I think companies like potash itself are certainly hot property, and I think there's every chance that we could see some sort of competitive bidding process for the company, BHP being joined.
Can you just explain to us why potash is such hot property, as you call it at the moment?
Well, it's one of the world's major fertilizer feedstocks, and whilst the focus, I guess, over the last decade has been on China and India and other emerging economies and their demand for, if you like, hard commodities, that is, I guess, the mineral resources that are mined from the ground. One of the things that can't be forgotten about, and where there's similar strong demand, is things like fertilizers, which are typically referred to as soft commodities. And as the world's population continues to grow strongly, so the world's demand for food supplies is growing accordingly. There's pressures in terms of arable land space. The one way of increasing crop yields and improving productivity is to increase use of fertilizers, and that is why companies that are supplying this particular market are in such high demand at the present time and have been probably for the last 5 to 6 years. Now,
what would be a fair price then for this company? Is it going to be closer to $150 a share?
Look, I think so. I mean, look, I think this is a rather low ball offer by BHP, and I don't think that they can be too surprised by the market's reaction and indeed, most importantly, Potash's reaction to the bid. I think that, importantly, at this particular level, it's certainly, earnings accretive for BHP, to use that particular buzzword. I think BHP can probably pay anywhere up to about $190 per share until the deal effectively becomes earnings neutral. So I think BHP is left, a large amount of room to move, if you like, up its sleeve. So this is far from, this first shot is far from its last, I would imagine.
OK, Gavin Wendt from MineLife Resources, thank you very much indeed.